Hey guys, what's going on? It's Riley here with Canadian Dividend Investing, and welcome to episode 2 or week 2 of my new series, Investing $1,000 in the S&P every week for a year. So welcome back to the portfolio, guys. The current portfolio is up to $1,982.66. Total, we are actually down $18. So I think I'm going to use this little corner here, or maybe it's on this side, to just show you the current holdings, because it's a little bit harder to see with the Questrade app. Let me know if that's something you guys are interested in, or if I should do something else with the numbers or percentages. I believe it's about 1.8% that we're down, and that's just after the first week of investing. So let's see what we can do. Today, what we're gonna do, same as last time, dollar cost average into VFV, which follows the S&P 500 index. So I'm gonna have to blur the screen or make a couple buys, and then I'm gonna go over a couple of questions that were in my last video. So let's dive right into it. We won't forget about the Blossom dividends as well at the end. So, all right, so we're gonna buy. Right now, again, lots of volatility in the markets with tariffs and everything going on, or the scarcity of potentially tariffs happening. I'm not sure exactly what is going on with that or when there's an update, because I believe it got, if I'm not mistaken, it got pushed to 30 days, but I know Trump wanted to potentially go through with it, so we'll see what happens with that. We're going to be buying with $1,000 today in the portfolio. Again, nets us about 6 shares, so we're gonna put that through and send order. And again, no matter what the market's doing, we're dollar cost averaging, which is investing the same amount on a weekly basis, which is in my case $1,000. You guys can do the same thing at home with a different amount as well. Now, I'm not sure with Questrade if you can buy fractional shares or not. I believe you can buy dollar amounts. I could be wrong, but let me know in the comments if you guys know about that. But before we jump over to the Blossom dividends, I just wanted to go over 2 questions that were in my comments last week. Normally I'll do one. This week I found 2 that were fairly interesting. So the first comment was, and I'll throw it up on the screen here, is, in your opinion, what's better, higher return or higher dividends long term? For example, VOO versus SCHD. If you guys don't already know, VOO tracks the S&P 500, similar to VFV. SCHD is a higher dividend yield ETF. I don't think there's an equivalent for Canadian dollars. So if you guys know that, let me know in the comments as well. But my opinion would be growth is going to be your best friend until you reach a certain age where you want that income coming in. So again, everyone's situation is very different, so it's hard to predict what you versus I or me is going to do. But in my opinion, trying to get your stock account as high as you can, and then investing in those dividend type stocks to get that income back later on in life is probably beneficial. Although there is merit to just dividend investing in general and just growth investing and selling it off. So I think that's probably what I'll end up doing though, is growth stocks until I get a certain point, and then sell the growth stocks off for a percentage of my portfolio being dividend stocks that pay me on a monthly basis. So that's kind of my opinion. Next question. I'm about to max out my TFSA and RRSP limit, but would like to invest still. What are my options? So a couple different options. I'd say TFSA, RRSP are great to have maxed out. What you want to look into, and this depends on your situation of course, is the FHSA, which is the first-time home buyers. If you haven't bought a home yet, definitely invest in that. I would put that towards being one of the top investment tools with TFSA. And then if you have any kids, are ESPs as well, because if you want to set them aside a college fund, that would be something that would be very beneficial for them and yourself, because it is tax-free. There's a certain allotment of money, and then the government actually matches that as well. And if your kid or whoever doesn't go to college, you get to pull that money out. You are taxed on it in that case, but I think it's a great investment tool. And then last but not least, the non-registered account, which is what I'm investing in right now. So those are your options moving forward. I think it's great to max out TFSA or RSP, and then dive into the non-registered account after, if you don't have the option to invest in FHSA or RESP. Okay, without further ado, let's dive into the Blossom social app. I want to show you guys my dividends from this portfolio. We'll see if we can get that going. And then that's probably what we'll finish off with today. So we'll check back in 2 seconds. Alright guys, so I figured it out. We did the dividend forecast for my Questrade account, and this is just with, I believe, $1,000 invested. So annually, with this amount, you're gonna be making $8.69 in dividends on a monthly basis, 72 cents, and on a daily basis, 2 cents in dividends. As we increase the number of shares into this account, obviously that will grow the dividend income. If you haven't already, download Questrade, Wealthsimple, as well as Blossom Social app. All links in the description. Join my Discord. If you have any comments, questions, concerns, let me know in the comments. Thank you guys for watching as always, and happy investing.